Hey everybody, this is Serge Papineau from the agency Ottawa, and this is your July 2023 Ottawa Real Estate Market update. Remember at the end of the last update, I told you that we were expecting an announcement from the Bank of Canada at the beginning of June regarding interest rates. A lot of people thought interest rates were going to start rising again, and that's exactly what happened. The Bank of Canada at the beginning of June raised the overnight rate by 0.25%, which means that variable rates went up. What's also happened in the last few months is that fixed rates have started climbing as well. For a while there, you can get a fixed rate mortgage below 5%, in some cases even in the mid 4% interest range. We're now in the kind of mid to high 5% range for fixed rate mortgages. Variable rates are about 1% higher than that. So did these increases have an impact on the Ottawa real estate market in the month of June? The answer is yes, kind of. All right, so let me run you through the stats, and then as I always do, I'll give you a few of my key takeaways or key insights from what we're seeing in the market. So Andrew, I'm gonna get you to put the Freehold Stats up on the screen now. All right, so for freehold properties in Ottawa in the month of June, we sold a total of 1,235 freehold homes in Ottawa. That's a really low total for June. You'd have to go back to 2012, which was the last time that we failed to break 1,300 sales for the month of June. But typically June is one of, if not the busiest month when it comes to total sales in Ottawa. Not the case this year. We actually sold 241 homes fewer in June than we did in May. So very, very low sales total. The average price in June for freehold property was $747,000. That's flat with the previous month and really the previous few months. We've been right around that $745,000 to $750,000 average price point since the month of April. So prices have remained flat even though sales volume is way down. Homes that sold in June on average took 23 days to sell, also flat with the month of May, 23 days in May, 23 days in June. And the homes that sold in June sold for 99% of the list price, almost full price. It's a slight dip from May where we're at 99.2%. For all intents and purposes, flat. Last but not least, and this one is interesting, inventory. Inventory levels rose in June. We went from 1.6 months of inventory at the end of May to 2.1 months of inventory at the end of June. Now, if you remember, inventory is a measure of, Andrew? Oh, he's not paying attention. What's supply and demand. Inventory, I gotta teach him better. Inventory is a measure of supply and demand, right? And we had seen inventory literally come down every single month this year. June was the first month this year where inventory levels actually rose. Now, 2.1 months, still super low, but again, be very interesting to see if this is the beginning of a trend. All right, so that does it for freehold. All right, now let's move on to condos. In condos, you'll see a lot of the same patterns that we are seeing in freehold. So first and foremost, let's put the stats for condos up on the screen. In June, we sold a total of 424 condos in Ottawa. It's about 10% less than we sold in May. Still a pretty strong month overall, and actually still more or less in line with what we do in a typical June. So we didn't see that same drop in condos that we saw in freehold. The sale price of condos was $451,000. That was about 2% higher than the month of May, and condo prices have steadily increased every single month this year. They haven't surged, but they're kind of ticking up steadily. I don't think 2% is significant, especially when we're talking about 400 unit sales, but it's something to keep an eye on. Condos that sold took 28 days on average to sell, a little longer from last month. Last month was 26, again, not super significant. And they sold for 98.7% of their list price, which is exactly what they did in May, right? So no real movement there. Inventory for condos also ticked up. So much like freehold, we went from 1.3 months of inventory in May to 1.5 months of inventory in June. So a small uptick. Again, still a very, very low total for inventory, very low inventory levels, but it's the first time we've seen inventory tick up all year. So very, very interesting to see if this is also the beginning of a trend. All right, so that does it for the stats. Now let me give you 3 of my key takeaways, things I'm seeing in the market. So first and foremost, let's talk a little big picture. Now, as I just said, we had a rate hike in June. That rate hike was relatively small, quarter point. However, it was also, if you paid attention to the announcement, it also seemed to signal that it was going to be the first in a series of hikes. So it looks like we may go back into that place where we were at the beginning of 2022, where every single time the Bank of Canada had an announcement, they raised rates and they raised rates and they raised rates. So there's a lot of fear now that this rate hike from June is only the first in a series. The next announcement from the Bank of Canada is July 12th. Most people predict that there's going to be yet another interest rate hike. Now, If you remember in 2022, these rate hikes slowed the market significantly. They didn't turn it into a buyer's market. They didn't crash the market by any means. We don't have enough supply for that. However, what they did is they kind of froze or paused the market. We started seeing extremely low sales volume. And in June, we kind of saw that again with Freehold. We saw a really, really low number of sales. It'll be interesting to me to see if that's just a blip or if this is a trend that continues. If we kind of go back into that place that we were in for a lot of 2022, where things are just slower to move. There's not a lot of inventory, but there's also not a lot of sales happening. Now, staying with the rate hike announcement, one of the good news that come out of that announcement is that inflation is starting to fall in line and starting to get under control. We're now at about 3.4% inflation, which is a lot closer to the sort of 2% target that we're aiming for. For a while there, we were in that kind of 7-8% range. So a little bit of good news. The other thing, and I'm just kind of speculating here, two things. One, I'm curious to see if these rate hikes are going to kind of turn into like the price of gas, in the sense that, when gas goes up at first, everybody complains. I remember when gas first hit $1, everybody, oh my God, $1 a liter, that's insane, that's unsustainable. And then a few months go by and everybody just kind of gets used to it and it becomes a new normal. And then gas hits $1.25 and everybody loses their mind for a little bit and then it becomes a new, and we just kind of eventually get it adjusted to it. We've seen the market adjust to sort of 5-6% interest rates over the course of the last few months. Things have been moving very well in Ottawa. Supply has been dwindling. Now it looks like rates are back on the rise. I'll be very curious to see if people eventually just kind of adapt to these new interest rates and if the market just kind of perseveres in spite of the hikes. The other piece of speculation is that a lot of these COVID mortgages, right? A lot of the mortgages for properties that were bought during COVID where interest rates were insanely low are up for renewal in 2025, 2026. I am speculating, but I suspect that the Bank of Canada has a target to kind of get inflation under control and start bringing rates back down for 2025, 2026. If rates stay really high, inflation stays really high, it's going to be very difficult for a lot of these COVID mortgages to renew, right? To qualify even to renew in 2025, 2026. I think the Bank of Canada's got a very, very close eye on that, and they're doing everything they can, which might mean a lot of pain in the short term, so that we can kind of restabilize and get everything lined up to allow people to stay in their homes when their mortgages come up in 2025, 2026. All right, so that does it for our first takeaway. Second takeaway, I want to tell you about days to sell versus days on market. Something I found really interesting. I told you that in June, freehold properties that sold on average took 23 days to do so. What's really interesting is when I look at the total of current active freehold listings, the average number of days on market for those active listings is 33. The fact that average number of days on market is higher than the average number of days to sell a property isn't in and of itself some crazy phenomenon. It's actually pretty common. It's very normal. But what I find interesting is that the gap between days to sell and days on market is growing. And that speaks to a phenomenon that I've hammered home over and over and over again in the 2023 market updates in particular. And that's that what we're seeing out there is that there is low supply and there are a lot of buyers who are qualified and ready to buy. However, they are super picky, and they're not willing to throw offers at just anything. And so in this market, a lot of the time when you list a property, if you do it right, you prep it well, you price it well, it tends to sell pretty quickly. But if you don't do it right, it can really, really take quite a long time. You end up chasing the market. There's not a lot of in between right now. You either kind of sell quickly or it takes a real long time. And again, that's because buyers are super picky. So if you're a seller, what can you do with this information? Well, if you're a seller and you've got a typical freehold home, right? $500,000 to $1 million price point, no real crazy hard to sell features, right? Typical property. You know that property, if it's going to sell, it should sell in an average of 2 to 3 weeks, right? 23 days, 3 weeks. We also know that on average, every 10 to 12 showings on a property will typically yield one offer. That's about the ratio, right? One offer per 10 to 12 showings. So if you're listing a property, you're going to want to position that property at a price that will ideally get you 10 to 12 showings within the first 3 weeks. That should lead to an offer and hopefully a sale, right? And so those are two of the factors that we're really, really monitoring on listings right now. Number of showings and number of offers. And that really lets us know if we're positioned well or not. So if you've listed a property and 3 weeks have gone by, you're now 23 days on the market, or you're getting close to that, and you've got nowhere near a dozen showings, you've only had 2 or 3, that's a sign that maybe you're not positioned properly. Maybe there's something wrong with your price. Conversely, if you've been on the market and you've had multiple dozens of showings, right? 20, 30, 40 showings, and you still have yet to receive an offer, that's also a sign that there's probably something wrong with your price. Buyers just aren't seeing enough value. And again, in this market, you can be as patient as you want. If buyers don't see value, it doesn't matter. They will move on. So that does it for our second takeaway. The third and final takeaway, I want to talk about comparables and how they apply in this market, because it's something I've seen a lot of lately. So when we talk about comparables, right, when we're pricing a property, we look at comparables, similar properties to the one that we're pricing. We look at what they've sold for, and that gives us a sense of what the property that we are pricing, whether we're a buyer thinking of making an offer or a seller thinking of selling, gives us a sense of what that property could fetch on the open market. It informs our actions as a buyer or a seller, right? So those are comparables. In the past in Ottawa, the market had always been pretty stable, right? We'd have these periods of kind of slow increases, and then the market would flatten for a while and then it'd increase again. The chart kind of looked like a staircase. The chart in the COVID era for the Ottawa market kind of looks more like a roller coaster track. It's up and it's down, and that's really thrown a lot of comparables out of whack. So it's extremely important in this sort of new era, this new COVID era of real estate in Ottawa. When we're using comparables, we pay very close attention to the month that property was sold in, and then that we adjust accordingly. Because it's very easy for anyone, agent or otherwise, just in the last year and a half to cherry pick periods of 2 or 3 months for their comparables to tell the story that they want about a property. So for example, if I want to paint a picture that the property that I'm looking to sell is worth a lot more than it actually is, I'm going to look at comparables from early 2022, late 2021. However, if I want to try to paint the opposite picture, right? So maybe I'm representing a buyer who's looking to make a lowball offer on a property. Well, then I'm going to use comparables from late 2022 and early 2023 when the market was quite depressed. And there can sometimes be as much as a 20% gap. The same house in early 2022, if I time it perfectly, would sell for about 20% more than it would have later that year. So the comparables can really, really be out of whack. So what does it mean? Well, we've said it's harder to move properties in this market if you're not priced well. And one of the mistakes I see a lot of sellers make is they say, well, my neighbor, in March of 2022 sold for this much. It's the same house as mine, so I should probably get about the same, and then they price it that way. And those houses don't sell. And I see buyers do the same thing. I see buyers look at comparables from late 2022 where houses were really kind of selling at a discount to where they are today, and refusing to pay today's market value because not too long ago, literally 7 months ago, that same house was selling for maybe 10% less, 12, 13% less than it is today. So again, super important in this new world. In the past in Ottawa, you could go back 2-3 years for comparables, and a lot of times they were valid. Maybe you'd add 2% a year or something. It was kind of easy. Now it's not about looking at the year, it's really the month and year, and you really have to adjust those comparables for what we're seeing in the market today. I told you in the beginning of this video that prices have been pretty stable since April. So if you're going back 2-3 months, you're okay. If you're going back more than that, again, remember, you have to adjust up or down based on where the market has moved since those older comparables were sold. So handy little tip for you. So that does it for this month's market update. Hope you found it useful. I'll remind you that we've set up a great little Calendly link that allows you to book a discovery session directly with me. The link is in the description to this video. If you have questions about your personal situation, the market, you're thinking of buying, selling, investing, always happy to chat and provide you with some guidance. So just click on the Calendly link, book a discovery call with me. We'll connect, and hopefully I can provide you with the answers that you seek. All right, that does it for this month. Once again, I'm Serge Papineau, and I'll see you next month.